Hi, good evening, partners. So today we have come for an interesting session for the launch of fixed deposit. So today we have none other than our founder Vishrant from AssetPlus. So Vishrant, I would like to hand over the session with you, and I'll be moderating the session today.
Balaji, I'm good to begin. Can
Yeah,
you
please.
see if my screen is visible?
Yes.
Okay, great. So, hi everyone. Welcome to the session. So, firstly, I would like to thank all advisors for taking their time off to attend this because I'm aware that markets have not had a great performance today. I'm sure a lot of you are going to be getting immense number of questions from clients as to how to handle market volatility, and you will also have to be there to comfort them and give them the good behavioral guidance as well. So, on that note, so today the session is about AssetPlus launching corporate fixed deposits. So, this is something that's I would consider is a very strong milestone for AssetPlus because AssetPlus as a company, I would just like to reiterate to partners who have not heard this before. So, us launching corporate fixed deposits is very much in line with the core philosophy of AssetPlus as an entire company. So I'll just take a quick minute of your time to describe what exactly is our vision and the philosophy that we intend to follow. So it's very simple. It's basically divided into two parts. So for the first part, at Asset Plus, we believe that in a country like India, most of the Indian population requires handholding and guidance to select good products, to take right financial decisions, and to create wealth over long term. So which means financial advisors and trusted professionals are a must. So there can be plenty of do-it-yourself platforms that are arriving, which can open the gateways for customers to experience mutual funds or any other product. But we strongly believe for someone to stay invested over a long term and continue to take right financial decisions and overcome their behavioral bias, financial advisors are a must. And the second part is for financial advisors to have a thriving long-term relationship and also a thriving business when they deal with customers. It is important for advisors to not just look at one product, but to be able to cater to all aspects of the financial life of their customers and be able to advise them on all the right financial products that are required. So as you would know, so AssetPlus has an MF distribution platform which is being used by over 1,500 distributors, and month on month we are seeing immense growth in the platform. The technology is becoming very stable and that will continue to develop as well. So in line with the vision of AssetPlus as a company is where we are right now. We are launching fixed deposits. So now to talk a little bit about fixed deposits. So I'm sure all of us will know what exactly are the traditional bank fixed deposits that are available with each and every bank. But here we are specifically launching corporate fixed deposits of two companies, which, as you can see on the screen, will be Mahindra Finance and Shriram. So firstly, I would like to discuss a little more about corporate FDs and give a quick introduction about how are they different from bank fixed deposits and what are the salient features. Number one, they are offered by NBFCs as opposed to being offered by banks. But in terms of characteristics, they have the same features as that of a bank FD. So they have a fixed tenure, they have a fixed interest rate that is provided to the customer. And just like a bank FD, you can choose cumulative option where the interest rate is reinvested and compounds over a period of time. Or you can choose non-cumulative, which means the interest rate is paid out to the customer in regular intervals. And corporate FDs are also regulated very well by RBI. They have rating agencies that track the performance of the company that is issuing the corporate FDs, and that gives a fair indication as to how safe the corporate FDs are. And thirdly, due to the nature of business model of NBFCs, they tend to they tend to make better margins on the loans provided to their customers, which translates into better interest rates for customers that are investing in corporate FDs. So usually you will see a minimum of 1.5 to 2% difference between, say, an SBI bank fixed deposit as well as a corporate fixed deposit. So that's a quick summary of FDs. Now I would like to talk a little about the level of safety in corporate fixed deposits. And now I'm also going to be there are hundreds of companies that issue corporate FDs, but now I'm specifically going to speak about the two FDs that are available on AssetPlus, which is Mahindra Finance and Shriram Transport Finance Corporation. So these two companies are extremely well known across the country, and they have a legacy of over 30 years. That's number one. So in fact, Shriram Transport was founded in 1979. So it's almost 43 years since the company has been in business. And secondly, when you're evaluating how safe a corporate fixed deposit is, it becomes important to evaluate the robustness of the business model of the parent company. So in this case, we have taken a look, and not just taken a look, we have done the complete diligence to be able to select how strong Mahindra and Shriram corporate FDs can be by looking at all of the financials and the balance sheets of the parent companies. So Shriram Transport Finance, for example, the financial year that has just ended, so they have declared a profit after tax of 2,700 crores. So that should give an indication of how powerful the business is. And not only this, but over the last 5 years, including the year that we were hit by COVID massively in 2020, Shriram Transport has declared a consolidated net profit of more than 2,000 crores consistently. Similarly, Mahindra is also a very popular name. It's the same group company as the Mahindra Automobile Company, and they have also declared 1,100 CR in PAT the last financial year, and they have continued to declare year-on-year profit after tax of anywhere between 700 to 1,000 CR. This plus the analysis we have done of the rest of the financial statements and balance sheets gives us enough concern, gives us enough factors to ensure that there need not have to be any concern while recommending these two company fixed deposits to customers. So the level of safety in this is very high. So additionally, apart from the analysis that's been done by AssetPlus, so the credit rating agencies have also given FAAA, that's CRISIL, and MAA plus by ICRA. So these are the two popular credit rating agencies that rate various company corporate fixed deposits. So they have given both of these the highest level of rating in terms of safety. So which means when advisors are recommending these to customers, they can be very sure of how safe these corporate fixed deposits are. Next, so why are we launching corporate fixed deposits right now? Why are FDs important in this scenario? So number one is, a lot of us will know that the mutual fund industry has grown tremendously over the last 5 to 7 years. Financial awareness of clients has been increasing. People want to save and invest from an early age. That is something, that's a story that all of us are well aware of. But what has also happened in parallel is the market and AUM for fixed deposits has also increased tremendously by the side, which shows that there are always a set of customers in a conservative country like India who prefer products that are offering guaranteed returns for specific financial goals. So it means that mutual funds and corporate fixed deposits, it need not have to be a MF versus FD debate, but we will have to look at it as, are there clients who are investing in mutual funds who have additional financial goals for which a fixed return product like a corporate FD is suitable? And that is something that's, in fact, the market numbers are very clearly showing. So the corporate FD AUM as on today alone has crossed 2.5 lakh crores. So that's a huge number, and that's been increasing by over 18% year on year. And thirdly, right now, the interest rates are also expected to increase. So the bank FD rates are anywhere between 4.5 to 5.5% as on today. The corporate fixed deposit rates are anywhere between 6.5 to as high as 8. And this is with RBI having just started to increase the interest rates. So as RBI has indicated, it will continue to increase the interest rates. There will be a lot of demand generated where fixed deposit returns are touching 9.5%, or are expected to touch in the next couple of years. During this time, a lot of clients might feel that, do I have to bear the equity volatility or hybrid fund volatility for shorter durations to get the higher returns? Or will it be simpler for me to bear no volatility and invest in corporate FDs instead, where I can get 9% assured returns? So when the opportunity is going to be immense over the next 2 to 3 years for FDs. So we felt it's a great time for AssetPlus to launch this for advisors and enable them to take it to their clients digitally. So next, what are the major benefits for customers in corporate FDs? So number one, as I had mentioned a little earlier, so corporate FDs offer much better interest rates for the customer than traditional bank fixed deposits. And this can vary anywhere between 1.5 to 2% for good companies. So there are also going to be corporate FDs that offer 4% or 5% more than the bank fixed deposit, but those are not what we recommend considering the safety of the depositor's money. So when specifically looking at Shriram Transport and Mahindra Finance, you can expect the additional interest that the clients will receive will be anywhere between 1.5 to 2%. And second benefit for the customers is the returns are, the interest rates and returns are not subject to any market volatility at all. So which means we are allowed by the regulator to use the word guaranteed returns while talking to the customers, and the degree of safety is very high when it comes to the corporate FDs. And a lot of customers these days, although they will have long-term goals for which they wish to invest in equities and mutual funds for higher returns, but they will also have short-term financial goals, maybe for a 1-year duration or 2-year duration, where these FDs can now give better yields than bank FDs as well as liquid funds. And third benefit is FDs are not very restrictive, that there is a certain amount of flexibility based on the investment tenure that the customer wishes. If the financial goal is a 1-year goal, say the customer wants to park 10 lakhs to be able to use it for a vacation later on, or the customer wants to park a amount of 15 lakhs for their kids' education 2 years later, they always have the flexibility to choose tenures that are suitable for their financial goal. And fourth point is, unlike mutual funds where the age of the investor does not matter for returns, in FDs, senior citizens typically tend to get 0.25 to 0.35% extra returns on the deposits that they make, which makes this extremely lucrative for senior citizens who are looking for a monthly income because they might have they retired and stopped earning. And finally, on AssetPlus platform, the entire process of investing and tracking, both for advisors as well as the end customers, is completely digital and involves no paperwork at all. And I believe we are one of the first in the country to be able to provide the solution to the advisors as well as their customers. Next, what are the major benefits for distributors to look at corporate fixed deposits as a product? So firstly, this FDs enable, it is an additional product offering that they can talk to the customers about, right? So it enables the customer to look at the mutual fund distributor not just as an MFD, but as a comprehensive financial advisor. So every MFD will have to expand the product offering they're providing to the customers, and the wider the range of product offering, the more the wallet share of the customer that you can hold. So these days, advisors will be very surprised to know almost every client who has an SAP running for their kids' education or for their retirement, which are long-term goals, also can have a bank FD of say 1 lakh or 2 lakh as a contingency fund or for short-term goals, which they might not bring into mutual funds at all. So by introducing products such as corporate fixed deposits, this enables advisors to tap into that money for the customers, which anyway would not have come into mutual funds. And third, this also enables the advisors to tap into the newer customer segments, which could be the more conservative customer segments in tier 2, tier 3 areas where the customers are not yet ready to take the risk to invest in equity markets, where they become uncomfortable with volatility, or especially when it comes to senior citizens who are extremely concerned about their money having any form of volatility at all because their income stream has stopped. So these are new customer segments that can be tapped into with corporate FDs as a product. And fourth point, it's, as I mentioned, it's fair. Everyone knows fixed deposits, and there's not much of a difference between bank FD and corporate FD. So unlike mutual funds where the customers will have to be explained a lot about how do markets function, their thought process has to be long-term, and you'll have to guide on a regular basis, FDs become a much easier product to recommend and explain to the customers. And finally, this is also something that's equally important. The nature of commission and brokerage for corporate fixed deposits is quite different from that of mutual funds. In mutual funds, when someone recommends say 10 lakh investment at a 1% commission to their customer, the mutual fund brokerage is paid out on a trail basis, right? So a 10 lakh investment at 1% is 10,000 rupees per year. So which means the advisor earns around 800 to 850 rupees for the first month, and so on as the markets continue having impact on the M2M value of the portfolio. But in case of corporate fixed deposits, the commission that is earned is completely upfront. So if you're recommending a client to consider a 10 lakh of purchase in an FD, which is giving a brokerage of 1.5% upfront, the immediate next month, the advisor will receive 15,000 rupees as an upfront commission. So it's a one-time commission payout. So how advisors can look at corporate FDs is, especially new mutual fund distributors who are coming into the industry, For mutual funds, the commissions are structured in such a manner that when advisor puts in 1 to 1.5 years of solid effort, the passive income stream of the advisor, the recurring income stream of the advisor is solidified over a long term, right? So which means if an advisor has a 5 crore AUM and at 1% commission, it's 5 lakhs per annum that the advisor receives as long as the assets continue to stay invested. But in mutual funds, one small challenge that exists is until the advisor is able to build up a good SIP book and build up a good AUM, which can take anywhere between say 6 months or 9 months or 12 months, there might be a requirement to have an income stream for their personal finances until then. So corporate FDs can play a very good role in being able to supplement that income source. So it's not that, again, it is very important that advisors don't look at this product as a competition to mutual funds, but both in terms of client wallet share as well as in terms of the income stream, corporate FDs can take care of a certain amount of upfront income that new distributors will especially require, whereas mutual funds continue to build that trail income that will help the advisor create a recurring passive income over long term. So these are the benefits for distributors. And finally, since we are launching corporate fixed deposits for the first time, we also would like to announce that we have some very lucrative rewards over and above the upfront commission that will be provided to advisors who are transacting on the fixed deposit schemes. These are going to be in the terms of gift cards that can be redeemed completely for gold. So the exact terms and conditions and the rates and eligibility for this is something that will be shortly shared with you on email as well as by the sales team over phone call or WhatsApp communications. And this brings me to the end of the presentation, where I have wanted to mention that AssetPlus is now successfully launched corporate fixed deposit. And I hope this adds another product to the bouquet of products that advisors are already offering. And we genuinely hope advisors are able to capture a better wallet share of their customer and provide a better experience to the customer through corporate fixed deposits. So thanks everyone for your time. And we'll open the floor for questions.
Hello.
Hello.
Yeah, hi, sir. This is Bomu, sir. Good evening. Good evening, sir.
Yes, hi,
Sir.
Bomu. Please tell.
Yeah, hi. Sir, the Shriram Finance has any history of defaulting any payments on the corporate fixed?
So the corporate FDs that are of the tenure that's being launched. So Shriram Transport as a group does not have any strong history of defaults at all. In fact, what is happening within the Shriram group that we have understood in our analysis is Shriram as a group has multiple companies under its banner. So the most prominent one is the transport finance, followed by chit funds, and they have a couple of other smaller businesses. So what gives us a lot of confidence with regard to Shriram is all these businesses have now consolidated into a larger group, and they are pretty aggressive in the market given their existing profitability to take on larger players like Mahindra and Bajaj Finance as well. So all of this together and the fact that there has not been any history of defaults, we consider Shriram fixed deposits to be relatively safe.
Also to add on to what Vishant has told, Shriram FD has been considered by Fitch rating as BB. From negative to stable, it has been moved.
So in fact, CRISIL as well as ICRA, both the rating agencies have given the highest rating in terms of safety for Shriram as well as Mahindra deposits.
Good evening. I have a question. So basically, like if we compare corporate FDs with with bank FDs, in banks, what usually happens is that, let's suppose in ICICI Bank or HDFC, what happens is, let's suppose you book an FD for 3 years, and maybe after 1.5 years you decide to prematurely withdraw it. So what happens there is, I have seen that the bank basically, when you withdraw it prematurely, banks give you interest based on let's suppose if you are withdrawing after 1.5 years, so it gives you the interest for 1.5 years, assuming that you if you would have booked an FD for 1.5 years, so whatever be the applicable interest rate, that is credited. But in case of NBFCs, I have seen that the penalties of premature withdrawal or that thing is a little high. So can you shed some light on that?
Yeah, sure, Apur. So actually NBFC corporate FDs also function in a similar manner. So when you talk about penalties for premature withdrawal, say for example, someone has invested in a 3-year fixed deposit, but then they would like to withdraw it in 1 year for whatsoever the reason. The NBFCs follow a similar pattern. In fact, the quantum of penalties is lesser for NBFCs. But what can happen is, if the customer has invested in a very long-term tenure and they wish to withdraw prematurely within a year or 2 years itself, what happen? Unlike a bank which has multiple tenure options, right? If you go to a bank, you can do a 3-month FD, you can do a 5-month, 6-month. So the number of tenure options are almost 15 to 20. So the difference in interest rates between each of the tenure option is minimal. Whereas for a corporate FD, specific to Shriram and Mahindra, there are 5 tenures available: 12, 24, 36, 48, and 60 months. That's like 1, 2, 3, 4, 5 years. So if someone has invested in a 3-year FD and wishes to withdraw in say 1.5 years, the interest will be as on a one difference between the 1-year interest rate and the 3-year interest rate will be quite large. So that might look to the customers as if it's a higher charge, but it's purely because of the lesser number of tenure options that are available. So as long as the customer is quite clear on what their approximate financial goals are and the duration is selected accordingly, this is not a cause of concern.
Yeah, got it. So basically, like this is the disclaimer kind of thing, which ideally we should inform the customers, because most of the times, sometimes it happens that customers tend to withdraw earlier and then they blame the agent. Here, you recommended a wrong product, or you should have informed this thing. I should have went with bank. Bank was so okay. Got it. One more question which I had is the business model on which Shriram is basically based on is like a majority of, if you look at the AGM and also majority of the things are based on, like, they basically they are doing something kind of what Ola is doing. They are basically giving hiring drivers on rent to drive their own taxi. Similarly, they are also kind of giving support to drivers and then kind of financing their truck business. Now with the rise in energy prices, especially crude oil, diesel and all, like maybe if the prices of petrol and diesel continue to rise, then what might happen is that the profit margins can fall. And if let's suppose if a lot of impact there happens, do you think that it might lead to some default cases? Like, what is your opinion on this?
Sure, Apur. So we can share more in-depth detail later on, but what I can tell based on the research that we have done is, number one, this is something that's being tracked very closely by RBI as well, right? So Shriram, if you look at the Shriram Transport as a company, the overall profitability is upwards of 2000 CR, and this comes from a very massive asset base that they already have. And similar to how banks are supposed to maintain certain ratios of current account balances, savings account balances, there are a lot of ratios that need to be maintained by each and every NBFC, and especially NBFCs that are aggressive on corporate fixed deposits. So the entire liquidity part of it, say what will happen if the energy prices increase, what will happen to say maybe a good chunk of the business is provided to Ola and Uber taxi drivers who might not be able to repay. This is largely taken care of by the regulator. And even if you look at the financial statements and the annual reports of Shriram Transport as a company, their business is extremely well diversified across geographies and across the business units. Say, for example, the Ola, this that you have mentioned right now, would not contribute to more than 5 to 7% of their entire business. And this also is very well diversified across multiple geographies too. And what gives us a lot of confidence is the fact that Shriram Transport was actually able to report a higher PAT during financial year 2020. That is when pretty much the entire transport, especially the consumer facing transport, came to a standstill, right? So that also is able to give a lot of confidence. And I'm assuming this is also something that the credit rating agencies would have seen before, giving a very strong credit rating.
Yeah, but like if you look at logistic companies, everything boomed during the COVID, like basically during the vaccination drive and all.
In fact, you can, what will give you better numbers is, you can look at how Shriram Transport profitability and the asset changed over both the .com boom as well as the 2008 global recession. So there was not a single corporate FD default at either of those times too.
Yes.
And to also add on to Vishrant, see, Shriram Fixed Deposit, Shriram Transport, this is a company which has been incorporated in 1979. It's a conglomerate which has a presence in commercial vehicle financing, commercial business, consumer finance, life, general insurance, stockbroking, chit funds, distribution, and it's not only one commercial vehicle presence. They have a huge presence from 1979. And they have been registered with RBI also in the Act of 45 IA. So there is not much to be afraid. They are very strong in terms of vehicle finance and commercial finance, is what the balance sheet also shows the report.
Actually, I asked this question why, because there was a case with one of my client, and I was advising her some similar product, and she basically told her that basically told her a story of her grandmother or some elder parent, and she told that she had invested some money in DHFL and PNB, and now she's saying that her money is kind of stuck, and PNB is a very good, like it is a government bank and all. And she asked me a question: Ki, do you think that in her entire life will she be able to see her money now? I think maximum she'll live for 5-7 years. This is what her question was. So that is the main reason why I asked this, because sometimes what happens is that if we should basically give a disclaimer to customer that your FD investment should be diversified, because if somebody goes all in one particular company, and if something bad happens, then at the end it comes on the agent only. So that is
So
the main
you're right. At uncertain time, like DHFL, Divan, during the 2019-20 turmoil, we have seen these incidents. So as a India, what we will be doing is we will have multiple fixed deposits. To start off, we have Mahindra and Shriram. We will build with Bajaj, and we will also give you a report telling which are the credit rating agencies have rated these FDs. Time to time, we will be updating these reports, and clear process will be followed here also in fixed deposits. So like how you select mutual fund companies, how you give the different schemes. So here also you need to do a little bit of homework before giving. But since more questions has been raised on Shriram, so this is a company where it is in existence for a very long time. So this has not been started 10 years before or 15 years before. It has been for a very long time. And almost they have 2 trillion assets as on 30th September, as per the balance sheet report. So more report we will give to you in the mails also. We'll send a mail on this particular company, how strong it is and how it is being managed also.
Cool, thank you.
What we also plan to do, Apurv, is we also plan to get one of the national heads of Shriram also, who would be available at the next session we'll be conducting over the next week or two, who can possibly answer all questions that you might have specific to Shriram, if you will.
Cool. Thank you. That would be all.
Just one more question, sir. Just for a basic question, I want to ask you, whatever the money they are raising through corporate deposits, fixed deposits, so they are using for their own business or their group businesses? And the second question is, see, I have certain money which is lying in corporate debt funds. Can we can pull and put it back in corporate fixed deposits?
I'm sure, Bom. So I will answer those. So firstly, with regard to the usage of the money that is collected, right? It could either be directly used by these companies for their lending arms. Say, for example, Shriram Transport offers a wide variety of vehicle financing, right? Both commercial as well as consumer. So they can either use it for those or for any other businesses internally. So there are certain limitations, and this is something that's provided by RBI as to how well the book should be diversified in terms of usage. But it is completely all these loans are all the FDs that are being deposited are purely used for the internal group company purposes and loans only. So it does not have any external usage. So it is not that, say, they would take a deposit of 10 lakhs from a customer and then pool many such deposits together and use it for some other purpose outside. So it's purely to grow their internal business. Their internal business could be their chit fund business. It could be their consumer vehicle financing, or it could be their commercial vehicle financing. It could be any of those.
Fine, sir.
And second question here, Bomus. So you have asked about certain investments that are in corporate bonds, right? So corporate bonds, I'm assuming. So here again, what makes the major factor by which you can decide whether it is going to be a debt mutual fund or a corporate FDs will depend on what is the actual financial goal of that particular investment. Say, if the customer might want to say invest over a period of say 4 or 5 years, right? And the customer comes in 30% tax slab, which means in corporate FDs, he's going to take a 30% hit. And given interest rates are increasing, you can consider most of the portion to be in corporate bond funds, because over 3 years, you will have your indexation benefit as well, right? And interest rates over a period of time will continue to increase as long as the maturity of your bonds in the FD corporate bond fund are quite less. But if this is a customer who is, say, a senior citizen who is expecting a monthly income, or you're very confident that the money is going to be taken out in the next 2 years by the customer, then it might not make a lot of sense to have it in corporate bonds, because the current corporate bond rates are quite low, right? It is, the yields are anywhere between 4.5 to 5, and it's highly unlikely that they will shoot up more than 6.5, or maximum say 7% in the next 2 years, whereas corporate are giving 7.5 as of today itself.
That's fine, sir. Thank you.
Okay, I can see two more questions on the chat. I'll just address them quickly. So first is by Ashwin Jajodia. So is there any tax benefit scheme in corporate FD? Like, so unlike bank fixed deposits where you can have a 5-year lock-in FD, corporate fixed deposits do not have a tax saving eligibility. So even if a customer invests for a 5-year FD in Mahindra or with Shriram, they will not be eligible for any Section 80C benefit. I hope that answers the question. And is there any platform we can study the corporate FD? So what we will be sharing a lot more information about how these corporate FDs function, both via our sales team as well as our marketing team over the next few weeks. In general, very simply, to evaluate a corporate fixed deposit, you should be able to evaluate the financials of the parent company, right? Which is something which to a large extent has already been done by the rating agencies, as well as we have done the due diligence. But if you want to know how good Shriram FD is, you should be able to evaluate the annual by looking at the annual reports and the financial statements, how the entire parent company and the group is functioning. So that is the best way for anyone to learn more about corporate FDs. But we have done most of the work for you. So I think what we are offering is a ready to consume version of corporate fixed deposits. So there are in fact a lot of FDs that we have come across which are giving 8.5, 9.5% even in this interest rate scenario. But those are fixed deposits that we will not be introducing on the AssetPlus platform, purely because the credit risk associated with those is something we consider to be very high.
Yeah, so Girish here this side. So I have one query regarding this RAM Transport have this corporate bonds as well, around at around 9 or 10% YTM. So should we consider those as well? Though the ticket size is around 10 lakhs, but how safe these are?
So the major difference between corporate bonds that you want to purchase separately and corporate FD will be, Girish, that corporate bonds are tradable, right? If they are exchange traded, they will be subject to day-to-day fluctuations in the price of the bonds. And more importantly, it might not be a great time to purchase bonds directly, because this is an interest rate scenario of increasing interest rates. So when you purchase a 3-year bond or a 5-year bond in the market and interest rates are increasing, so every time there's a increase in interest rate, the price will dip, right? So the volatility will be much higher. So I would recommend corporate FD, which has a guaranteed rate of interest, will be more preferable at this point than a Shriram corporate bond, which can have volatility. But again, this depends on the investor and their risk capability. So, but what I have mentioned is what is more for retail investors.
No, what if, because they are giving monthly coupons and in the last you will get the amount, whatever you are like at maturity, right? You will get.
So if you are planning to hold on till maturity, then what you will have to second evaluate is each of the bonds that are being issued will have different credit rating based on the tenure of the bond and the reason the bond is being issued. So that those are something you will have to evaluate very carefully. It's not as simple as an FD where everything is evaluated and you can just make purchase. So maybe a particular tranche of bonds issued by Shriram might be rated AAA, but Shriram also issues bonds that are AA minus. So you'll have to be very careful about understanding what tranche of bonds were issued and what is the rating agency providing for those. What is the rating provided for those particular tranche of bonds?
Okay, got it. And like there is one more thing, nowadays there are a lot of like 12% club by Bharat Pay and this P2p lending platforms also. So they also give like good kind of higher returns, because customers keep on asking, clients keep on asking about this, that should we go for 12% club or should we go for this P2P lending platform? So how you like, what is the best way to explain them, and like how we can compare both of these things? I think both are not comparable because they are backed by some big companies, but
so I think the major difference between P2P as well as say corporate FDs or corporate bonds would be, Girish, is so we will have to look at what is the longevity of this asset class or investment product, right? So in general, P2P looks good on paper and it might actually do well also. So I cannot comment if it's a good product or a bad product, but why we are temporarily staying away from P2P is that we would like to see how P2P performs in case there is a 2008 kind of a scenario. Like for if you would like more information, you can read upon what is the state of the P2P industry in a country like China, right? Which introduced P2P more even before India. So pretty much the entire industry is dead, right? So it is always possible that the way RBI is regulating Indian P2P is very, very different from what happened in China. But we would, before launching a product and requesting advisors to consider for their customers, we want to ensure that a minimum duration of a track record of 15 to 20 years is present. So it is, as of now, the volatility is high and risk will definitely be higher than corporate FDs for P2P. And that is the reason why additional interest rates is also provided in P2P.
Okay. Yeah, I think thanks. That answers my both of the questions.
Okay, so I think we can take one more question if there are any pending questions, and then we can close the session. Any other questions from any advisors? Okay, Balaji, looks like this is it. We can conclude that session.
I think we can end the session from here.
Okay, so again, thanks everyone for taking time off to attend the session. So over and above the information that we have discussed now, we are also going to be actively sharing information across multiple channels. So you will be receiving emails, and the sales team also will be sharing information with you on WhatsApp. So if you have any queries on this, please feel free to reach out to us. And we strongly believe corporate FDs as a product should be something you can consider for your customers and will genuinely add value to your customers as well. So thanks again for the session. Let's end.
Thank you, Vishwan. Thank you, partners, for joining. Bye.